So guys, without wasting time, I think we already have a good audience there, and people will keep on joining, but we'll start the sessions. So this is very interesting. This regulation which has come, I think it's primarily, you can call it as a more like backroom regulations, where most of the guys in the back end with the IT infrastructure team, the data centers team, the CISO teams, and all these things, risk management team, and all these things will be working day and night, and to ensure that most of the aspects are being well taken care, right? While the product team and the business teams work on the different regulation, but these regulations, you may call it may not be directly linking to that. But I think that's where the things are changing, right? It's not being limited to the back room or the front room kind of things. And it's all started, many of you may be coming from the banking background, and you will remember in somewhere 2011, I think that's the master guidelines came on the similar line, which was primarily known as also as the Gopal Krishnan committee report, right? And it was a bulky, 174 pages of the document, which was there at various controls, guidelines were there put in the place. In fact, that's the time when I joined a bank and I was given a responsibility to ensure the compliance against that kind of the regulations. It's a massive exercise. Just you can imagine 174 controls, all pages of the controls, and every page is having a multiple controls. So it was a massive task. That was for the banks, but now the way things are changing, if you look at it, and that's where that genesis of this circular, if you look at it, it goes back February 2022 as a part of the monitoring policy, as a monthly statement on development of the regulatory policies. There, the first time it was announced, and it was appreciated the fact that now the financial institutions, not limited to the banks, are leveraging that good amount of technologies, right? It is accepted that. And also being lots of the partnership is emerging with the financial technologies companies, the fintech companies, and all these things. And this is putting the additional pressure on the compliance requirement. And that's where it asks for that, okay, maybe the financial institution, the banking fraternity may need a comprehensive master guidelines to manage that outsourcing of technology management, as well as the management of the entire governance and security policies, right? And that's a statement when it was called for this master circular, it also highlighted the facts that the digital channel adoption is also increasing, right? So that's where it appreciated the fact that, okay, we may need to have a very strong business continuity and cybersecurity kind of framework. So that's where that it was put in place that RBI will come out with a policy, and that's where last 2 weeks, I think 2 weeks back, RBI came with this policy guidelines. So without making term, this was more of the background, and then we'll get started on the sessions, guys. So what the agenda is primarily, we'll just run through that key snippets of the circular. Most of them you might have gone through that, but in case if any questions, it's more like an interactive. I would like to take your own also feedback, your understanding. In case if you have questions, they're happy to pick it up those questions also during the way. But it's more to just have a more interaction so that at least the doubts may be clear, right? Okay, so this is on the Master Direction on Information Technology Governance, Risk, Compliance, and Assurance Practices. Just 2 minutes bite on who we are. I think many of you know us pretty well, but many of you may be joining us the first time. So we are on a first technology, fintech, and the digital consulting firm in the country. We are almost 5 years in our journeys, and we work predominantly with the banks, NBFCs, the fintechs on the various aspects of the digital and the technologies guidance. The key 4 services, the consulting, where that we work with the customers, helping them into digital strategy, digital transformations, the open banking, the risk and compliance, the security, and all sort of the services that we work on it. And we work with the bank, NBFCs, the fintechs, partnership. There are many players who are there in the market which may not have the go-to market, or they are looking, they are fintechs companies, they are looking for the lending partners and all these things. That's where we work very closely with these fintechs and the tech players, helping them into the market connects. So that's one of the key other services offerings. The training is our other core service, where that we execute our 4 months executive training programs. It's our 4 months of the programs that runs on every Sundays for the mid to senior kind of professionals from the banks, BFSI segments. That's where we run. And we also do lots of the corporate training, again, into the digital domains. That's where that training services lies. And also we are helping many of the corporates, banks, NBFCs, fintechs, also hiring on the senior positions like product management, digital transformation leads, and all these things. That's it. There's just a quick view of the customers that whom we have worked into various, all these service lines that we have spoken about. We don't want to take much time on it. Now we are expanding into the various geographies, but primarily we are based out of Mumbai and the Bangalore, but we have the customers across the globe that we have catered to. All the consulting practices I've already spoken about, but primarily lies into the digital advisory services in terms of the digital transformation, digital strategies, the program management, working in the fintech and startup advisory, building on the go-to-market business model, the product management, and the technology guidance. Open banking, lots more things, building on the open banking strategy, open APIs, partnership, security and compliance, and lots more deep into the research and content services. These are the training services. Mainly into the open banking, digital lending, payments, embedded finance, cybersecurity, digital banking. We would have done almost 700 hours of the trainings across like last 5 years that we would have done. And also where the various customers, we have been doing the trainings as already spoken. The training, the hirings, we do lots of the hiring for the corporate. So that's all. I don't want to get too much about it. So now we'll get into that core part of the webinar that we are talking about. So when this circular came, as I was talking about, the Gopal Krishnan committee was the by de facto very comprehensive guidelines on the governance, security, audit, management, and everything for the banks. It was especially targeted towards the banks. Very similar, very concise version of that Gopal Krishnan committee came for the NBFCs. Again, it was divided into two parts, like the guidelines for the NBFCs having asset book of more than 500 crore and asset size of the less than 500 crore. Less than 500 crore, it was especially 4 or 5 pointers where that they need to follow. And for the 500 crore also, it was not too deep into that kind of guidelines. No specific guidelines, especially targeted towards the payments bank or the small finance bank kind of things. Now there is a comprehensive guidelines came for the cyber security in somewhere in 2016, which was emphasizing on the very deep control requirement for the cyber security. That was covering that all the banks per se, but not at the holistic level of the governance and all these things. So NBFC is brought into the picture, and also the first time, I think, at least my understanding, and I would be happy to get corrected, RBI is coming with a such kind of very comprehensive guidelines, which is targeting also to the credit information companies like bureaus and all this thing also. So that's very especially one major change that you can see into that whole of the context. But why then suddenly the need for that kind of the circulars? RBI is coming with all these guidelines on the risk management, the security, governance, and everything from the time to time. But why suddenly the master guidelines? I already give you the context. That's where the February, when it was talking about the need for that, since the market is already evolving, where the lots of the partnership, the uses, adoption of the emerging technologies is also taking place. RBI felt that we need to have a very single reference point of the guidelines or the circulars, which talking about comprehensively on all these domains of the governance, right? Be it on the risk management, be it on the policy management, be it on the security and everything. Rather than having the multiple reference point, multiple circulars and all these things to refer, they just try to repeal. So one of the things you will find this observation in the circular, that lots of the things have been repealed, right? And even those which have not been repealed or the cancelled, but for the compliance perspective, these guidelines become a master guidelines for the compliance adherence. So it becomes a single reference point they wanted to bring, and it becomes easier for the banks also to follow, for all the REs to follow, as well as for the audit agencies, like when the RBI comes for the audit and all this thing. That's also become a very clear, handy guidelines for the compliance checks. I think this is the major critical point, like unification of IT governance for REs. Since there was no specific guidelines for all the kind of the REs that we've been talking about the previous, there's a common framework of the governance, right? And what RBI is trying to do that, trying to bring that single uniform, universal governance structure where that everything is driven through the board. You will see in the subsequent slide when we're talking about each of the policies and all these things, you'll realize that everything is getting driven through the boards, right? So that's where that governance structure they wanted to bring into that picture. It could be possible that maybe in that I may be wrong, I may be right, but slowly I think things will move where that most of the REs will go through the comprehensive audit check under the C-sites also. The C-site is primarily a cybersecurity assessment that the banks goes through. Apart from that, RBI regular audit, which is a very comprehensive, deep audit. That's where that checks that entire the cybersecurity and framework. So things may start moving into that direction for the rest of the REs also. And I think lots of the focus is coming back on the information cybersecurity because of in the last couple of years, we would have seen the various kind of the incident, the breaches, not only within banks per se, but mostly outside the banks domain, like fintechs, the startups, and the non-financial institutions and the other areas that we've seen that massive breaches, as well as some of the performance and the service issues have been reported. So I think that's where that things are becoming more critical, and that's where the RBI wants to put a lot for emphasis. So that's where you see that one of the critical component of this circular is emphasizing on the business continuity and the disaster recovery requirement. So that's the primarily broad three reasons that we see that's why that RBI has come out with a single master guidelines. Before I continue into getting into each of the domains and what they're specifically talking about, I'll happy to pick up any questions are there, guys. Any question? Okay, so let's we'll continue, and maybe in case if you have a question, you can put it in the chat also. But let's continue. So this is a master guidelines applicable date. What it says that as soon as the date of issuance, the 6 months is the time frame that the primary directions will come into effect. That you will have a window of 6 months to do the implementation. I think from the bank's perspective, I don't see much of the challenges other than a couple of pointers which are there. But most of the things should be there because of that Gopal Krishnan committee adherence and all these things. Yes, small bank finance as payments bank and all these things, if they have been doing following that Gopal Krishnan committee, that's the master document, most of the things will be in place. But if not, then they will have to go through that. The challenge will be for most of the NBFCs and for the CICs and all these things that they will have to put in the entire structure in place within the 6 months. Lots of the controls can be divided into the procedural as well as the technological, right? Procedural in terms of the policy, setting up the strategy committee kind of things. Those are like more procedural in the nature. While in the technology, like you'll have to do certain configuration changes or the certain deployment of the tools and technologies within your framework. So, right. So that's where that entire controls could be divided into that. And entire guidelines can be seen into the divided into 7 domains or 7 chapters. So these are like primarily the first one, preliminary, more on the intro and this context setting for this guidelines. But rest of the things are the control frameworks within that IT governance, IT infrastructure and service management, which is again from the data center perspective, the project management perspective, the change management and all these things. How do you primarily drive your IT services? Fourth, again, the major critical one in managing the entire risk and the information security and including the cyber security per se as well. Then business continuity, disaster management, and especially after the pandemic and the COVID last 2 years, where that it's more seen that you need to have the real focus on the business continuity. Now we continue to have a very strong disaster recovery management structure, but I think focus is again on the business continuity. And then having a right audit framework within the information system audit. And the last chapter is primarily talking about what circulars have been repealed. So we'll look into some of these controls also. The one thing that you will find that it's not talking about very specifically the digital part, where in the bank's fraternity, if you look at it, technologies and the digitals, like either it's being part of the same teams or it's being separately being run around it. Still, from the technology perspective, it's not especially talking about digital per se, but I think you'll have to consider the digital technology stack and everything as a part of that entire IT circulars from the IT management perspective. So as we're talking about that the focus of this governance structure in the compliance circular is about the focus on the governance. I mean, say governance is top to bottom approach, right? It comes from the board. So all the chapters you will talk about, you will see that there is a formation of the committee at the board level. So everything is being driven from the board. Board is also having the responsibilities towards that, managing the right set of the policies, driving the entire IT strategy also. So IT strategy for every entity has been spoken. They need to have a proper IT strategy. It has to be completely aligned with the business strategy. So your 2 years roadmap or 3 year roadmap, which has been laid down as a part of the strategy, need to align with the business strategy. and it need to be completely vetted and approved by the board. So board has ownership of the entire IT strategy, right? And not only the study, but entire the policy and everything from the audit, the risk management, everything's board has to look at it, right? And now the board has more like an oversight kind of things on a day-to-day basis. I think it's also emphasizing to have an IT steering committee, which is like primarily being run at the CEO's level, right? Board level, it has to be from the independent director who is chairing that, while IT steering committee being managed by the chaired by the CEOs, and CEO is driving that entire agenda for the IT study, IT policies, and everything. And it also could be a part of various senior management is a part of that IT steering committee. And then very clearly calling out that head of IT role, right? From the circular perspective, RBI is very clearly calling out, they're not trying to differentiate between that designation name per se, like head of IT, you can call it as a CTO, you can call it as a CIO, whatever the terms that you want to refer. But from the circular perspective, managing the entire oversight, who is what the senior most person who is there within the organizations driving that day-to-day operation of IT will be having these roles and responsibilities, which is laid down in the circular. So be it you're calling within your organization the CTO or the CIO, they will have that ownership to drive that entire thing. So they need to own the IT strategy, they need to own the IT policies, they need to have the ownership of doing the day-to-day monitoring, implementations, and everything. And they need to report it to IT steering committee, also as to IT strategy committee. So that's where that for the governance structure is being laid down. Any question, guys? Any inputs? Any ideas from anybody? Okay. If not, let's continue. This is again critical part, and I think it has to come with the reason behind that. In the past, we would have seen the challenges of the performance issues, the system breakdown, and all these things. And the way the digital adoption has pushed the load on that complete backend infrastructure, right? In terms of the UPI transactions, ballooning it, right? And putting the lots of load on the core banking systems and the backend and all these things. That's where lots of emphasis is coming on the capacity planning. Like you need start looking the trends, performance, monitoring on a very regular, and then visualizing that what kind of transition coming from the different delivery channels, partners, like you may be onboarding various fintech partnership for the business, and you need to have to visualize that from where that transactions are coming, what kind of the volume of transaction will coming, and across all the layers, right? It's not only on the core banking system, you need to look at that, what would be my load, but entire your middle layer API platform is there. At API's level also, you need to check that what kind of the load will be there. So everything that the layer that from point to point, it's asking you to do a proper capacity planning and focus on. And also wherever that outsourcing has been done, that you've taken a proper instructions from the outsourcing guidelines, which is there, right? That's also came a couple of months back. Then capacity management is more from the future planning perspective, but day-to-day operations, you need to have very clearly SLAs laid down. If the vendor has been there to manage that, maybe the data center, maybe the servers, or maybe the network, whatever, clearly call out the KPIs are there, SLAs have been laid down, and there is a continuous monitoring of the SLAs. The risk assessment has been done, like what are the risks that pertains to that particular vendor who is managing that services that need to be called out, and what are the risk mitigation that activities that should be taken. A lot more emphasis has been put on the project management, right? Which was there earlier also into the Gopal Krishnan committee. But if you look at it, rest of the other circulars for the rest of the other REs, I think project management has not been there. But now the lots of emphasis on the project management. So, and because the reason, because very clearly, if you look at it, most of the REs, if you talk about today, have been lots of the initiatives going on across the digital technology and all these things. Some of them maybe are the long-term initiatives, some maybe short terms, but you need to have, and all may have an impact on the overall enterprise architecture. So one of the clear point calling out that having a very strong enterprise architecture, wherever there is a kind of a new initiative, new applications gets rolled out, you are looking back to your enterprise architecture, looking at what could be the impact it can have on overall architecture, and then accordingly going ahead with the program. So that's where that it's also emphasizing. And then all the projects has to be monitored at the IT steering committee, and it needs to get reported to IT strategy committee. So they need to have a very clear idea that what are the initiatives are running within the organization, what kind of the impact that it's bringing to the organizations, are the goals are being met with those initiatives and all these things. So very clearly that need to be called out. One thing that we found it a very, I think it's a good way. Earlier guidelines used to push for the source code management, escrow arrangement for most of the applications that banks or the REs need to onboard, right? But this time they try to change that guidelines slightly in favor of the banks and make it easier. That's when he's talking about the escrow arrangement. If in case the code is not owned by the bank, they can just get a written confirmation later from those entities that source code and all these things is free of the malware and all these things. Like typically we used to struggle to get the source code from escrow arrangement and all these things from the Finnacles or Infosys kind of the organization. Like it's a very difficult, but that's, I think, been eased out in this whole process. And the change management is, I think, most of the guys who are from the ITA know that why this becomes very critical. And they're emphasizing that any changes which goes within the organizations, be it on the technology layer, be it on the procedural layer, anything which may have the repercussions, it has to be assessed. The risks need to be analyzed and then accordingly the action to be taken. And all the changes should go through the proper testing mechanism with no production rollout without kind of testing. It's always been there as one of the best practices. Any other question, guys? Okay, the question, are there any contradiction between direction and the extent regulation for the outsourcing? No, there is no contradictions. If you look at it, yes, there is a very clear guidelines which has been defined when you're getting into the outsourcing of any services, technology services or all these things. In fact, both overlap each other. There is no contradiction, at least whatever we have looked at it, don't see any kind of contradictions. Except, for example, business continuity, disaster recovery that you are trying to plan it out. Then you need to extend the same for your outsourcing partner also. Like security, whatever that practices you're following within the organization, you need to make sure that those controls are being also being followed by the outsourcing partner. So I don't see much of the critical, any kind of the contradictory controls are there within that both the regulations. And one very thing interesting also that outsourcing guidelines, first time I think clearly calling out of that what are the controls that you need to taking care when you are going for the cloud adoptions. So one thing is that RBI is kind of already approving that, okay, you may adopt to the clouds, but you need to take care of certain guidelines. So that's also being highlighted. I hope, Millie, this answers your questions. Then there is a questions, Parul, I think what will be the role of CISO? Yes, I'm coming to that. I think in these guidelines, CISO roles has also been very clearly called out as a part of the IT risk and information security. So that's very clearly being called out as CISO role. Please reflect on the nuances for foreign banks. Yes, I think that was one of the things we could see that missing from this standard when it comes to the applicability as like foreign, which is talking about the foreign banks. So very difficult to comment within the context of this master circular, but I think they need to continue to adhere to the cyber security guidelines and other guidelines like outsourcing and all this which is there. In August, there was again question. In August, there was a master direction on outsourcing. Is this a follow-up? No. So the outsourcing was yes. August, that outsourcing circular came. That was a separate. That was only meant for that. All the controls requirement need to be taken care when you are outsourcing any services. Like this is for the internal IT management per se. So both are separate. Both are going to coexist. So from RBI perspective, I think these two circulars, one is outsourcing and second is master directions. Most of all the REs has to follow. These two are like going to be the kind of the key circulars. Both will coexist. Any other question, guys?
Shashank, if I can ask, this is Siddharth.
Yes, Siddharth, please. Yeah.
So, most of the things, thank you for, explaining all these circulars. But what I understand, Shashank, is that most of the things are already in place. So what is that delta which is there from the previous circulars to this circular, or whether it's like more or less the same, but now it is covering all the regulated entities? That difference is not coming out.
Yes, I think you summarized it pretty well. I already told that from the bank's perspective, if you try to look at it, you will not find on a big delta here, right? Not much of the thing. Most of the things were there. In fact, it has been much simplified. Like
Got it.
174-page document has now converted into 25-page document. So that's been lots of the things have been taken out and everything is very simplified. Yes, the major delta, if you try to look at it, is more of the inclusion of all the kind of the items into the framework. Like
Got it.
bureaus, NBFCs, and everybody is coming under the same framework.
So is it like mandated to all the NBFCs and all the regulated entities similar to the banks? Can we say that?
Yes. So NBFCs right now, what it's saying that as per the scale-based restructure, which was there, I think last time it was defined for the NBFCs for the classification. I think it says the top, upper layer, and the middle layer that will apply, not to the lower, lower level of the NBFCs as per the SBR. So the top 3 categories it will apply for. And still, it's not covering the cooperatives. So cooperative, whatever the circular has been there, in fact, the last year also very similar kind of the guidelines came for the cooperatives, urban cooperative banks. I think those will continue as a separate, because this is not specifically talking about the cooperative banks. But there's bureaus and all these things getting covered under this guidelines.
Yeah, okay, got it. Thank you.
So continuing on, I think this is where that, again, the crust lies between that IT risk and information security guidelines. Lots of the controls have been specified, like putting in a right control of the IT framework, including the asset management, the risk management, defining a proper internal risk assessment framework, and identifying what are the operational risks or the system level of the risk are there within the organization. What are your critical infrastructure is there? Yeah, one thing that's being also calling out, which was not there in earlier, but there's a very minor delta that they're asking, circular is asking the banks and the REs to define what is their crown jewels. So crown jewels means like what is your topmost critical infrastructure elements which can impact that organization's operations or the business itself. Like from the banks, you can always call it as a CBS, like Finacle. Finacle is my crown jewel, because if something goes wrong with the Finacle, it impacts my day-to-day business. So that's where they're trying to identify that you identify the crown jewels, and then also lay down that what are your controls that you have built it around your crown jewels. So that's one critical points has been identified. But I think most of the things applies. Then defining your risk matrices in terms of the RTO and the RPOs, everything's very clearly security policy and cyber security policy has to be there. Again, from the governance perspective, policy has to be approved by the board. They need to have the kind of the oversight onto policy implementations, the policy rollout, and everything, the policy compliance, everything has to be reported to the board. Nothing changes. Most of the guidelines on the previous on the cyber security and all this thing been there. That's when it's also emphasizing. Yes, it's very clearly calling it out that, okay, you may consider to go for ISO 27001 framework. And why there is a reason behind it. Like when you go for ISO kind of the frameworks, you go through a proper structured way of ensuring the security management and the compliance within the organization, right? And also it puts you on a certain kind of the binding that you will gonna go through that kind of audits every year, right? As a surveillance or audit and all these things. So that's why it's emphasizing. So one hand on the ISO 27000 for the security, in the BCP also is they're trying to that go for 22301 standards. So that's where you will find that. So most of the banks you will find that they may be ISO certified, but those who are not, especially on the NBFCs and all this thing, they may start looking for that kind of the compliance structure. As the question was there, the CISO, yes, CISO roles have been very clearly called out. And to ensure the better compliance, the CISO is not going to be part of the technology team. They will not be having the direct reporting to head of IT or the CTO and the CIOs. And they will be primarily ensuring all the compliance regulation from the cybersecurity perspective. They also will need to part of the IT strategy committee and the IT steering committee, because that's where that entire the rollout for the IT strategy, the IT technology solutions and everything get decided. And again, the focus is also on the privacy and access control. So that's there. So this is there more from the security and information security. But from the banks, I would always suggest that you continue to refer to 2016 guidelines, which is there on the cybersecurity policy. That's very comprehensive. And I think most of the C-sides audit will continue to happen against those guidelines. Yeah. I just check if there are any question. Yeah, Millie, I'll come back to your question, which is there with respect to foreign banks. I'll come back. Yeah. Now coming back to business continuity disaster management, I think we have seen during the COVID, it has been always been challenged. Banks, most of the banks has their DR side ready, right? But it was more on the operational challenges without moving people and all these things, how you can ensure that business operations continue to go. So that's where the focus is on the business continuity, like assuming that nothing is working and all this thing, how we're going to ensure that compliance. Maitri, can you take care of it? Yeah. So that's where adoption of best practices is emphasizing at like ISO 22301, which is like a universal accepted standard to lay down that continuity guidelines, which also say that okay, what should be the recovery procedures should be defined, roles and responsibilities, how the structure should be there. So everything is get defined. You need to identify all your processes. What are the critical processes? What are the critical resources aligned to each of the process? All the identification has to be done. Then what are the alternate mechanism and all these things. So that's where the guidelines is very comprehensive. This is a standard. So if you want to lay down a proper business continuity plan, this standard may be a good reference point to follow, right? Because it's very difficult, right? What to do, from where to start, what to do and what not to do. This guidelines is more emphasizing that what has to be done, but how it has to be done, it doesn't specify much in detail. For that's one of the reasons that says that okay, you may follow certainly the international standards, right? How to do that. So that's where there. I think disaster recovery very clearly it's calling about the DR architectures in place, procedures to be put in place. DR drills very clearly calling out that you need to be doing the DR drills for all your critical assets twice in a year, for remaining of the assets that you may be doing once in a year. But very fundamentally that you should be running that entire operation from the DR for a couple of days from the DR sites. It means that you have to move that entire workload at DR and then run the operation from the DR at least for a couple of days, right? So that's a very tough job for any of the banks, but that's where the critical scenarios are rare, right? In something goes wrong with your disaster, data center side, everything has to come from the DR side, right? So that's where that lots of emphasis is there. Yes, focus is there on the zero RPO. So I think many of you may not maybe aware of the RTO and RPO, but for that audience at large, I'll try to define. So RTO is a recovery time objectives, where like in case if any disaster happen, if your system goes down, how much time you will take to get the system up from the DR side, right? So say for example, if Finacle goes down at 4:30, and what time like 4:45 or 5 o'clock that you will get your DR site up means that 15 minutes or the 30 minutes is your RTO, right? RPO is recovery point objective. It means that up to what point of the data that you are afford to lose, right? It means that that will decide that what kind of the rate that you are replicating your data to the backup site, right? So, and you can't do that zero replications every time, right? So that's where that are you ready to you can afford to lose 10 minutes or the 20 minutes or the 30 minutes. That's a RPO. Lesser this RPO, the cost implication goes higher, right? But most of the banks in the country would have gone into the zero RPO structure, right? And they are also specific that you will be going for the zero RPO for the critical infrastructure. Wherever that you can't achieve your zero RPO, it means that you can't do the real-time replication and you will still lose some of the data points. You have to properly document the procedure that how you'll do the reconciliation, right? Say, for example, your payment system goes down and you are not able to have the data for the last 10 minutes or the 15 minutes. But how you get that data from the other sources, maybe the branch data, maybe from the channels data and all this thing, and try to reconcile that what debit or credit might have happened. I'm just giving one example. So you need to define that each of the application, wherever that you will not achieve the zero RPO, okay, where that you will lose certain amount of the data, how will you do the reconciliations? Any questions till that? Yeah, but guys, sincere request, Mathri has put in that feedback form. And we'll be sharing the deck once you submit the feedback form, but feedback is very critical for us. So please share your feedback forms. It's always been great help for us. Okay, continuing from there. So last chapter is more on the audit side of it. That's more on the independence of the audit. Again, from the governance structure, the audit has to be conducted independently by the third party when I said the other team within the organization, which is independent of the operational teams, or right. So audit committee of the, and this team need to be reporting to the audit committee of the board or the local management committee, not to the IT strategy committee, not to the IT steering committee, because they are responsible to manage that IT operations, IT strategy. They can't be doing the audit. So there has to be a separate audit team within the organizations. They should be mandated through the very clearly defined audit policies. Maybe clearly defining that what are the areas that audit will be conducted, be it on the governance area, be it on the user management, be it on the data management per se, or maybe the fintech partnership per se, right? So they will define that what are the domains or what are the areas that they need to do the audit, and then accordingly they do the audit. An entire report has to be submitted to this audit committee very clearly. I tell you, like one of the experience that whenever the RBI comes to an audit, I think the first thing they try to get hold of this internal audit report. That becomes an easy starting point for them. Okay. So this I was talking about that they are trying to bring that single reference point. So what they're trying to they're trying to remove that all the other related circulars across the different domains, be it on the risk management, audit, business continuity, vulnerability assessment, predatory setting. Although like 8 or 9 circulars are getting repealed, so this will become a single reference point. Two major policies which will continue to remain in force, which one is on outsourcing of information technology services, which came a couple of months back, and cyber security. The Gopal Krishnan Committee report, which I was talking about, 2011's circular on the information security IT governance, that has not been repealed. They can still be followed and referred, but what they're saying that from the compliance perspective, this master direction circular is sufficient. So if you are ensuring the compliance adherence within your organization, within your technology setup against this circular, that's a good enough. So any question, guys? There are no nodal agencies to overlook board. Also, there are no provision as to failure of compliance. Okay, so if you look at it, that's a very interesting questions from the board perspective. But that's where that the layer comes that RBI, right? From the bank's perspective, the RBI does a comprehensive, deep reviews, right? So, and they look at that, how the board has been behaving, board meetings and all this thing is being looked at it, the compliance structure, that how the board has been responding to the compliance and everything. So RBI is trying to bring that additional layer of the compliance, right? So one has the internal structure from the executive committee, the board committee, the independence of, and that's where you look at that they're trying to emphasize that independent members should be there as a part of the chairman. On top of the RBI is anyway there as a regulatory compliance, and then in addition to the statutory audit structure has been put in place, where the statutory auditor also looks into that different IT general controls and all these things. So yes, there are the entire governance structure, and top of this thing, RBI compliance structure, review structure is already been there. And these RBI audits are pretty tough audits, right? Been bank 8 years driving the digital and all this thing. I've been almost faced that these audits for the 8 years, and it's very comprehensive, very deep reviews. Yes, lapses happens, the gaps happens, but at least on the larger, that's where you don't see much of the kind of touchwood kind of major security breaches in the last couple of years within the banks and all this thing, right? What are the major drawbacks or the direction do you think there is in any need for improvement? I don't think so. That's a very well comprehensively covered. But yes, if you ask me, I think digital should have been very clearly called out because this always creates a kind of the gaps within the organization also. Who is responsible for the digital? If the team is responsible for the digital, is the same team responsible for the IT continuity and all the other things? That's where the gaps are there. Sorry. Yeah, continuing again. So as we've been talking about that, there's so much of the data, but I think this circular brings lots of the impact. The clear impact is on the CICs, the credit information companies, as well as the NBFCs. Then also it brings lots of the impact on the payments bank and the SFBs. Sorry. Okay, so one of the mandate, as we was talking about, that it came from the partnership of the fintech and all this thing. I think it will influence lots of the partnership between the banks and the fintechs in terms of putting on the control structure, right? And the assurance of the security and privacy, that's still there, right? Maybe Vikrant, you are there. Is Vikrant there, Maitri?
Yes, just give me a minute.
Yeah. So, okay, so these are all we've been talking about. We do lots of the works on the compliance side of it. And that's where, as I was talking about, me and the team experience has been there into managing the compliance. So lots of things we do working with the fintechs and the startups and the banks also in this area. So we do the kind of the gap assessment against these guidelines. Where do we exist? What are controls are there? In terms of the procedural or in terms of the technology gaps, helping into writing the policies and procedures, setting up the entire governance and the risk management frameworks, helping them into implementation of ISO standard, and then doing the RBI audit preparedness and the compliance reviews. Sorry. Yes, Shrikant, you're there.
Yeah, we can.
So we can the last just you can talk about that.
Yeah, I will just get it. Yeah. On the executive program side, so we will be coming up with the new program on the fintech and open banking. That will be the executive program for the executives which are interested into. So usually we do this program with the bank and fintech partners, also with the other players from the team. We have done 4 programs till now, and this is the AP5, which will be coming up in the by the 4th December 2022. We are planning to start this program. So there will be the interactive sessions which will be happening with the industry experts and the fintech, payments, and open banking experts out there. So we do cover the fintech, payments, open banking, and also the wealth and insurance, and a few of the regulatory part out there. Also, these sessions are conducted live. So this will be the online Zoom sessions. Also will be supported by some recorded sessions. So there will be sort of 48 hours of online content, and there will be 24 hours of recording sessions altogether. So bundling that, we will be conducting these sessions out there. So we do work on a few case studies based on the what do we call as a capstone project. So this will be the assignments given as a capstone projects for the participants. So there will be a group of participants which will be working on this, and they will be coming up with the the projects and the presentation for that. So this whole together, this program work goes up to 4 to 6 weeks. So 4 to 6 months altogether. So that's what we are planning for. So a detailed brochure we will be sharing with you. I mean, you can reach out to Shrikant or us and leave a feedback to us. So we will be sharing that with you along with this. Yeah.
Thank you, Vikrant. So that's all, guys, from our side. Happy to pick up any questions. Me and Vikrant are there. We'll help you with the questions. And please, again, sincere request, Bethany has already put in the feedback link into that chat. Please provide your feedback. It's very critical for us. Yeah. Any questions?
Yeah, guys, if there are any questions, we are still here. Can discuss.
Yeah, Parul has asked questions. Under IT infra guidelines, are there different guidelines for system hosted and on cloud? No, I don't think so. There are different guidelines are there per se, but if you try to look at that entire IT infra management and all these things, guidelines are there that what you need to follow when you are trying to manage your infra. But from the cloud perspective, you need to refer to the outsourcing guidelines, which I was talking about, where that very clearly calling out that what are the controls that you need to follow when you're moving your workloads on the cloud. So that's where that you need to, but let's suppose the capacity management perspective, the SLA management perspective, you need to be taking care from that, this master directions for both on-prem as well as on the cloud infrastructure. But from the cloud management perspective, what are the things that you need to follow? You need to refer that outsourcing guidelines is there. Yeah, Google
I think Google is asking for the presentation. Yeah.
Yes. So we intend to sell. Whosoever provided that feedback forms, we definitely share that the presentation with them. So please do share your feedback, and then we'll get back to you with the presentations. We'll share that.